Cool. Hello everybody, live on YouTube for the first time tonight, and like always we're having some fun technical difficulties. I've just got a Zoom on the side trying to let people into know that there's a chat. So hey guys, everyone from the school community, if you go into the Insightful Wealth School or if you go into the Crypto Calls School, there's a post with the link to this. So you will actually be able to see what's going on there. So just go back into school and jump on the link, because we are now live on the YouTubes. And so we're going to be live on YouTube every week going forward. I'm just doing multiple things at the moment, everybody. There's some people jumped into the old Zoom link, and I'm just putting the link here to school. So guys, in the chat, in Zoom, click on that, come over to YouTube, or look in the school account of Insightful Wealth or Crypto Calls, and that will get you into the meeting. All right, so what a weekend it's been. So a bit of a sell-off over the weekend with crypto markets. Public markets have been really, really strong. ASX, we've had great reportings through from publicly listed companies, and that has all been going really, really well. So I'm a bit distracted as I'm trying to organize two things at the same time. Need an extra pair of hands. So most people are jumping out of there. Okay, so lots has been happening in the markets. Bitcoin bounced off a really strong area of support, which we sort of mapped out last week. So we'll have a look at that chart in a second, but let's have a look at what's going on with our banter bubble. So over the last week, we talked about this meme coin launching last week, and it's up sort of 84% from what it was when we sort of spoke about it. So if you think about these new coins that are coming out, this particular protocol is looking to, I guess, change or have another platform rather than just pump.com for young or for new up and coming coins to get launched on before they can go to the main exchanges. And so we've had a bit of a sell-off over the weekend. Today's been a bit of a mixed bag. We've got some investments that have been performing really, really well, and others not so amazing. Looking at US stocks, whoa, Berkshire Hathaway, there's not a mistake there. Let's have a wonder what's going on. Can Berkshire really be down 121%? I think that's an anomaly. Let's have a look. I think everyone would be talking about this. And so when you want to have a look at what's going on, I just go to Yahoo Finance, Berkshire Hathaway, and stock it's down 0.5%. So I'm not sure what's going on with banter bubbles there, but this is, whoa, it's fixing itself on the fly. That's definitely wrong. So don't pay any attention to that. Having a look at what's happening in the crypto markets and thinking about what's going on with the whole fear and greed indexes, we're still sitting at a very bullish intersection between institutional investors are still buying, but retail investors and retail wallets, there are more and more of those being created every month, every week, and there's more retail money pouring into the spot prices of some of these investable assets. And so what that has done is that has risen the price of some of the underlying crypto assets that we're investing into, and at the same time we haven't seen an exuberance in terms of extreme greed coming into the market. Whenever we do see extreme greed come into the market like this and stay up or stay elevated for a prolonged period of time, we have these sharp selling off in terms of the Bitcoin price. So we want to see this black line come back up here, making new all-time highs. And when it's making all new time highs, we want us to stay in this green area of greed, but we don't want it to get too far extended into that extreme greed area. Hopefully everyone's out of the Zoom call by now. I'm going to close that down. All right, so just one thing to do. What I'm going to do tonight is spend a little bit more time in the charts and actually just have a look at what's happening with BTC, what's also happening with Solana, and some potential entries that you could be looking at. Was there some examples of price movement, and then where you can potentially have a look at some of those entries. So before we get into that, we'll just go around the grounds and just go through all of our sort of TradFi investments. Gold is still performing admirably. I was doing some reviews with clients over the last couple of weeks, and we hold gold as a sort of a ballast as part of the Your Corner core portfolio. So what some of my private wealth clients, and they've seen astronomical growth in there because we've had these portfolios probably for the last 5 years. And so when you think about what gold price was, it's monthly 5 years ago, so 2017, you're talking about it's like 1,000. So around about $1,000. 5 years ago is 2020. But even around here, we've been investing in gold this whole period of time. And so they've seen 100, 200, 300% returns on a very small portion of their portfolio. I typically use gold as a ballast because it typically acts completely uncorrelated to both bonds and equities. So if we do get a sell-off, then we do have a flight to safety, which generally means that gold price is going to go up. I've said this many times on this show on a weekly basis, and my concern here is that everything is hitting all-time highs. Gold, silver, S&P 500, NASDAQ, Bitcoin, Solana, not necessarily Solana and Ethereum, but the altcoin season has potentially seen a rotation of capital back into that sector. So all growth assets are on. And at the same time, the global economies are sort of limping along, trying to work out what's exactly happening with the US tariffs. And at the same time as reserve banks around the world are looking at reducing interest rates. So they've reduced interest rates in Australia. It looks like they'll definitely, it's a very high chance that they're going to reduce rates this month in the US. And so what that means is that our economy here at home in Australia and the economy in the US isn't doing fantastically, but the Trump administration is really pushing to get those interest rates declining. And the reason that they want those interest rates declining because they have trillions of dollars of debt, literally hundreds of billions of dollars of debt that needs to be refinanced from very, very short-term debt instruments, US government bonds, and they want to get the interest rates down, and then they want to extend the term or the life of that debt. So rather than having to refinance every year, we can refinance that in 50 years or 100 years. So if you think about a home loan in Australia, you can pay that home loan off over a 20, 30 year period because it's a relatively safe, reliable asset, and banks will lend against it, knowing that over a period of time, you'll be able to pay that off. Also, the longer that it takes you to pay that loan down, the cheaper that initial debt becomes. So if you think about inflation and your purchasing power, as inflation increases, your salary increases, your buying capacity will continue to increase with that inflationary increase of income. So long as your income increases with the rate of cost of living. But what you'll also see is that initial amount of debt that you paid. So for example, I think my dad bought a house for about $28,000 in the late 70s, 78. And that house is worth, $1.5 million. I think it's about $1.5 million now. So over that 40-year period, that property has gone up exponentially in value. But that original loan that he took out to buy that house of like $20,000 or $22,000, many of my friends and colleagues and clients, earn that in a couple of weeks. So if you had to repay that loan now and you had only paid interest only for 30 years, well, it's very, very easy to repay that debt. And so that's a strategy that corporations and then also companies can utilize to manage their debt over that longer period of time. And so when you think about the Australian government or the New South Wales state government, or if you think about the US government, well, they're definitely going to be around, well, hopefully, they're going to be all around for the next 100, 200, 300 years. So they can extend the debt periods or the ability for them to pay off that debt over that period of time, particularly if they think that the current interest rate environment is going to be at the lower end of the average over that period of debt time. So, and that's sort of bits what's going on with bonds at the moment. So silver again is sitting at looking at all-time highs as well. Everything is looking frothy at the moment. Does that mean things are going to sell off? I don't think so. I think the US government has had a fire put under it. I think we're going to see a very, very bullish next couple of years. And I think that that's going to coincide with the 4 to 5 year sort of crypto cycle as well. So we should see the next sort of 18 to 24 months be very, very bullish, but we'll see how we go. Oil, let's get rid of that. Oil has maintained its downward trend. It's looking really, really weak. And that's why Australian companies like Woodside are really, really struggling in terms of their share price, because the oil that they're bringing out of the ground or that they're pumping out of oil rigs is just less valuable to be able to sell that into the market. And you'll continue to see oil prices continue to decline. US dollar, again, declining. Now that they really believe that interest rates are going to go lower, you'll see the US dollar continue to trend lower. The VIX, which is a volatility index on the S&P 500, is not at all-time lows, but it's at that very, very low basis. So everything is calm in financial markets. Options pricing is very, very cheap. And there's some stability in financial, so there's no fear at the moment in any of the markets. USDT dominance is again sitting at that underneath that 4.5%. That means that the majority of capital that is available has been flowing back into spot crypto rather than sitting on the sidelines. So when we see like times down here in the early 2021, this is sort of this is the beginning of or the middle of a big peak in price. Or price going higher, because there's a lot of buyers or people have moved capital from USDT across into actual crypto assets. Bitcoin dominance, we've seen this sell off quite significantly. So ETH has had a really good run, Sol's had a really good run recently, and so Bitcoin dominance has sold off. So is this the signal that we've been waiting for so we can see that alt season commence? I still think that Bitcoin has a long way to run. So I think this might just be a small blip before we see BTC rally again. So total market cap, at the beginning of this cycle, I was targeting sort of $10 trillion. We're still a long, long way from that. I've got some other charts on here, which is basically showing us these sort of areas of support. Come on. But we do have a good uptrend here in terms of the whole market cap of the market increasing. And so this chart here looks very, very similar to this Bitcoin chart. So if you have a look at, if you're thinking about what you just saw in terms of the total market cap compared to Bitcoin, well, Bitcoin forms over 50% of the market cap, but those charts look nearly exactly the same. And so we will continue to see those up. If you have a look at total market cap excluding BTC, again, very, very bullish. Let's get also, what I want to talk about is, again, the Dow Jones Industrial is floating with all-time highs. This is just as we've come out of earnings season. The reason that we're seeing so much bullishness in public markets is that they think interest rates will, they believe the interest rates are going to be reducing, so that means there's going to be more liquidity or borrowing, and the cost of business is going to be cheaper. So a lot of these publicly listed companies should become more profitable, and then prices go up in value, and that's what they're sort of looking at. But also earnings season was very, very bullish. And all-time highs was just on Friday night. So that was Monday. That's Friday. So the S&P 500 hit all-time highs again on Friday. And so interestingly, whilst we saw public markets hitting all-time highs over in the US, Bitcoin was actually selling off over the weekend. So there was a significant amount of profit taking happening in BTC and also the crypto markets. NASDAQ is humming along as well, although not as bullishly as the S&P. And it looks like, actually, you just have a quick look at this. It looks like our bottom of our trend line here for this cycle looks like it's sort of shadowing a bit of resistance. So if you could move this around, but this sort of area here, it looks like our bottom trend line on this channel that we were trending along for quite a long time. It looks like it's sitting at a bit of a resistance point against here, but you know, if the NASDAQ continues to head north at the bottom end of this channel, it's still heading to higher highs, which is good for all of those investors. So with all that being said, let's have a look. So what I want to do is just go through this chart first. So having a look at BTC, that's the wrong one. Sorry, just getting this all organized. All right, so what we were having a look at last week was these areas of support and resistance that we've seen since sort of the Trump administration took over. And what we have is we have these areas here. We've got like it was resistance, now it's support. And when we're looking at places where there's potentially liquidity to be taken out, or there are buyers that are going to come in at that particular zones, what we want to be looking at and we want to be assessing is having a look at, well, where are our natural Fibonacci numbers going to sit? So if we have a look here, and this is just at a very macro level, so on the weekly, if we have a look up there, we're sitting in that 3182 or just above that. So that this area of support that we have here on this longer time frame, and we're talking about since the beginning of this year, this push up, a pullback into here is just above that 318. The golden zone is actually significantly lower down here. We really probably don't want to see a retracement back down there. If we look at over a shorter time frame in terms of from here to there, where the market is sitting right now is smack bang in that 50% retracement and that golden zone between 50% and 618. So if you can have a look here, this golden zone here, it's where we've trended down into, and we've sort of bounced off this bottom area twice, and this coincides with also this area of previous resistance, which has now become support. And then so looking at that weekly, so like, okay, well, if that's the case, well, where can we start looking for some potential entries on BTC? So if you're trading over a longer term, a really great entry would have been down here off this big bearish candle, but you know, that's just sort of catching a falling knife, because who knows how far that is going to continue to decline on the daily. But when you have this pin candle next to it, so when you have this little pin doji here, so we've got big sell-off, and then we have this hammer at the bottom. This is sort of telling us that on the following day of this big sell-off, the bears didn't win. They tried to sell off further, but we've bounced off the exact same area of resistance or support that we had previously. So if you're then looking for an entry, a really great entry would have been here on the open of the next day. And then you could probably say, well, I'm happy to then, if it does decline down into this particular area, have another buy down there and then be targeting something like this. So if you had a trade that's set like this, and then I would target this area up here. And this is on a long-term swing trade. So you could potentially just put your stop loss below this area over here. Although there's going to be a lot of people potentially trying to push price down. There's a lot of sellers potentially that's going to push price down, hunting this area through here, because naturally most traders are going to do exactly what I just did. I want to enter in here. I want to look for a low where I want to put my stop below there, and so that would be a natural spot for most traders to have that, or even maybe just above those closes, but you want to have it below those. I'd have it below those wicks, and then you're looking at a trade here 2.5 to 1, so that's not too bad. But what I would also potentially do, or what I would have done, maybe I did, would have had another buy order sitting in here with a similar stop, and I would have doubled the size of my position at that. So I would have said, look, I'm happy to get in here in case we rip, because we're probably going to, I'll miss it if I'm looking for a bit more of a retracement. But I'd also say, well, I'm happy to put another buy order into the market here with a similar stop here, so I can average my stop loss low. And if you have a look at the price difference, this trade here is 2.5 to 1. This trade here, which is a much better entry, is a 4.6 to 1. So you average those back out, and you're talking about probably a 3.25 to 1 on that particular trade. No, probably 3.75 on those. And so a lot of the times when you're thinking about building out trades or trading positions, you can be right in terms of directionally, but you can be wrong in terms of your entry. And therefore you can go into drawdown for quite considerable amounts of time. And so what I do is I look at, well, if I want to get into the market now because I think we've had a bullish reversal and it's going to take off, well, I want to make sure that I get in at the open of tomorrow. This is a longer term swing trade. But if it sells off to where, and it's going to bounce off that support zone again, well then I want to put in another buy at that particular point. So maybe rather than taking a full trade initially, you might take a half trade, and then you'll have another half trade at that lower entry price, at that lower entry, and trade, or you've got to back test this to build it out yourself. For me, I consider these as two separate trades, so I take them as two full trades, and then away we go. So yeah, we're sitting in a nice profit on both of those at the moment, so that's good. And so that's BTC. Now, that's if you're looking at doing something on a more macro level. So this trade will probably play out over the next couple of weeks, and some of you like some more excitement than that. You like to get onto the lower time frames. So let's have a look. So what I'll do is I'll leave these trades in here on this chart, and we'll come back next week and see how we've gone on this swing trade. So seven more days from here. So 1, 2, 3. I think we'll be sitting around this mark here. I think we'll be sitting around this line somewhere in here next week. Let's come back and have a look where we are. So I think we'll probably be sitting somewhere in this zone here where we've got next week. So we'll see if we can trade up into that particular area. Hopefully we're at full profit. That'd be fantastic, but we'll wait and see. There has to be an absolute rip in price, which, it could. It's only really a move of, call it 7%, and so in a couple of days the market can definitely move. In a week the market can definitely move. So what's that? So let me just move this lower for you so you can all see. So if you're having a look from here to there in a week, so 7 days, you're looking at moves of 10%. So we can definitely have these big moves up. What we don't want to see is the market bump up here and we get another sell-off, because we've got a high, a low, which is in line with here, a lower high, a lower low. We don't want this to make another lower high, because we can potentially then say, well, it's a change of direction, and we could see the market testing us to the downside. So again, I'll be managing this on an ongoing basis. If this market does sort of turn over, where's my painting? Where's my paintbrush? So if the market does turn over here and we make a lower high, then I'll probably be looking at exiting that particular trade at this higher time frame. Now let's go down and have a little look at the exact same chart, but utilizing some different type of analysis, and then at a lower time frame. So same thesis for what we had previously, but what I've got on the chart here as also is I've got moved down into a 15-minute chart, and what I've got on here is the monthly low, the daily low, and the monthly low, the weekly low. And so there is when you looked at those higher time frame charts, it just looked like, well, we just had one actual moment where price came down and bounced off that. Well, yes, that's true, but intraday we've actually had multiple tests of these particular areas. So we've had a test here, and a test here, and a test here, and this is actually two tests, because we had one there, one through there. So the market, there are buyers in this zone. There are buyers in here. So the bulls are winning at this particular price at the moment. So are we going to see, and there's not a lot of resistance between where we are now and actually ripping back up here to the weekly high. And so thinking about that, or even testing the all-time high, which is over here at 117. And so there's a lot of opportunity, or there's nothing really standing in the way between price continuing to bounce off this daily high and then continuing to move higher. And so that's what I'm calling for the next week. I think these tests of this 105, 104 level have been significant, and a lot of buyers have come in here, and we're going to see price head further north. So if I was looking at a shorter term time frame on a trade like this, well, you could be looking at, you probably want to see a bit of a pullback in the chart from here, somewhere in here. I would put my stop somewhere in there, and then I'd be targeting that weekly high. And again, what I'd probably be looking to do is, if price sold off, I'd want to be looking at buying again, taking another 50% position just underneath that daily high level. So if I came down here, look, so if I set that up like this, that's there. And then I would do the same thing, and I'd have another buy position sitting here with the same. And then and these are trades that I would be looking at actively managing in Bitcoin. So that's enough of me talking for tonight, or at the moment, and sort of hunting out a bit of trades and giving you a bit of an idea of to how I look for discretional trades when the PTS is being quiet, or when I've got some time to look at the charts. Who has seen? I don't know if I can hear you on YouTube. I probably can't. Let's just have a look in the chat. All right, so next time I'll get you to send me a list of all of the coins that you want me to assess and look at for you in this broadcast. And we're going to be moving, definitely sticking to crypto and charting, but we're going to be exploring more of the PTS trades that are going to be coming and the portfolio. But I'm also going to be doing a lot more work in and around traditional finance. So some companies that are performing really well, some things that we should be looking at, and then I'll be following. I'm just about to launch our income maximizer portfolio, and that'll be tracked on an ongoing basis. So hopefully everyone had a fun night. I will catch up with you all soon. I just had an alert go off and it scared me out. So have a good night, everyone. Thanks so much. Please like and subscribe. Share the channel if you found this useful. I look forward to catching you all in the Finsightful School community. Have a great day.